Good morning, traders. This is Ala Peters, founder of Fibonacci Trading Institute and proprietor Fibonacci method. In this webinar, we'll be sharing how you can trade with ultimate simplicity and ultimate accuracy, indicator-free, using price and Fibonacci only. And what do we all have in common? Love for the market. And why is the reason everyone here to learn? What makes market tick? What makes market move? And what is it? Fibonacci. But first, before I start the webinar, I would like to remind you, every single thing you will see in this webinar is not a financial advisor. I am here to inspire you and to educate you how to trade with ultimate accuracy, ultimate consistency, using price and Fibonacci. No matter if you trade futures, stocks, forex, no matter if you trade bitcoins, no matter what you trade, what you see in this webinar, method applies to. I would like to remind you that past performance is not indicative of futures results, and all the testimonials you will see in these webinars I believe to be true on all the emails and testimonies I receive daily. But it does not guarantee that your results will duplicate anyone else's results, as all comes from your personal effort. So, what shall you expect in this webinar? In this webinar, I will show you step-by-step gameplay, how to become a profitable trader and investor, utilizing all I will show you throughout this webinar, as well as we'll touch on what is coming next month in Fibonacci Trading Institute. We will touch on Fibonacci versus indicators. We will address simplicity of price action patterns. I will show you how you can trade with institutions, no matter how small your account size is. I will show you where to enter positions, when not to trade, no matter what you trade. And most importantly, I will show you how Fibonacci identifies your exits, your profit targets, independent of news, earnings, or any indicators. We will analyze examples from various stocks, futures to forex throughout webinar. And the most important part, we will address trader's mindset and how everything you will see in this webinar is absolutely beneficial to your trading success. So, have you ever felt that markets drive you insane? Have you ever felt absolutely lost, absolutely confused, not understanding what in the world is happening? Why is Apple in free fall? Why is Amazon in free fall? Why is Netflix crashing when they come out with spectacular earnings? Do you ever feel that chasing indicators and software that doesn't work is absolutely exhausting, because it seems like market is flooded with indicators and software that all look so perfect but none make you money? Do you feel lost, not having a clue where to enter, where to exit? And you are completely perplexed. Why are markets collapsing and rallying despite contradictory earnings? We will address this throughout webinar. So, if you are ready to become profitable price action trader, not an indicator trader, but price action trader, no matter if you trade stocks, futures, options, or forex, no matter if you trade any instrument, any platform, any time frame, if you are ready to exhale and enjoy trading using precise rules, and if you are ready to trade with institutions and not against them, if you are ready to stop wasting time, stop losing money, stop stressing out about the market, you want to see this webinar. So, how in the world did I come up with the idea of price action and Fibonacci? Until market crash in 2007, 2008, I invested on fundamentals, I invested on earnings, and I listened to CNBC. It was one of my favorite things to do. When market went into free fall in 2008, I recognized very, very clearly, if I will continue paying attention to noise, there would not be much left in my account. I removed absolutely everything from my chart, and I recognized very, very clearly that market is Fibonacci puzzle, that nothing else matters, that every single price action pattern that's developed in the markets preset by Fibonacci levels, that everything else background noise. This is what I recognized very, very clearly. Take a look on this chart and let's do a test. What instrument is this? We have 41 people in the room. Pretty please do tell me. Anyone would like to take a guess? No one knows. No one will ever be able to recognize. Doesn't matter if it's top trader on the planet. This is gold hourly. And if I will change the name on this chart, do you think anyone would recognize what this is? No one knows. It's a candlestick chart. It's not a bar chart. This is traders Apple. It doesn't matter what time frame. Previous chart was gold hourly. This is Apple weekly. Charts are twins. Identical price action patterns remain. And if I would change this chart one more time to this, anyone knows what this is? No one knows. It doesn't matter what time frame, it doesn't matter what instrument, they all look the same. They all look identical. This is S&P mini future 5-minute chart. That's where I started recognizing very, very clearly in 2007. Every single chart, every single instrument keeps repeating identical patterns. If you can trade 5-minute S&P, you can trade Apple weekly, you can trade pound monthly. All have identical price action patterns. The only thing there was left for me to do is to identify where these patterns start, where these patterns end. And I was fortunate enough that I had nothing better to do but to study charts. And I recognized very, very clearly that every single one of these trend inception, trend reversal levels were preset by Fibonacci sequence, and nothing else mattered. Since 2011, I worked with traders who have $1,000 account to trading firms on Wall Street that manage billions of dollars. I worked with traders who trade S&P mini future. I worked with traders who trade oil, gold, Apple, Amazon, mutual fund, any instrument on the planet. And every single trader decides what they want to trade, because price action patterns you will see on every single example remain exactly the same. This is S&P mini future from Fibonacci class this morning. This is proprietary Fibonacci tool that show you in advance where market will reverse. This is the end of the minor trend. Bright pink line is crucial. End of minor trend, crucial Fibonacci support and Fibonacci resistance. You never short near, you never buy near. You buy from, you short from. Ultimate trend inception, where buyers stepped in on S&P on April 18th. And after 3-day war zone, price finally skyrocketed through the end of the minor trend, where market been selling off but struggling to break through this support. All identified days in advance. If I would convert this chart to 5-minute top day trading chart in US, what do you see? 5-minute chart selling off from Fibonacci reversal zone. This is the market for the last 2 days. And if I would squeeze this chart, what would you see? Bullish rally started at key support 28.91 and skyrocketed until reversal zone. All identified days in advance. So, this is identical chart on Apple. This is identical Fibonacci support. Apple at 93. Apple comes out with the worst earnings 2015. I present at hedge fund convention and I say I do not care about Apple worst earnings. What I do care about, this is key Fibonacci support. This support is respected, Apple will head to drastically higher levels. It is posted on my LinkedIn profile, it is posted on YouTube channel, it is posted on multiple social media forums. And this is what Apple had done next. Doubled in value despite worst earnings in 13 years. And what do you see in advance? Fibonacci reversal zone 214 level. And that's what Apple reaches next. After earnings, one step at a time, all in advance, never after the fact. And this is what transpires when Apple reaches reversal zone, just like S&P had done this morning. Apple freezes in correction. There is absolutely no problems with Apple, no problems with earnings whatsoever. What else do you see on the bottom? 140 Fibonacci reversal zone. This is Apple selling off. All in advance, never ever ever after the fact. And this is Apple at the start of 2019. Starts finding support at trend inception 140 level, identified years in advance. How does it make any sense? There is no bad news on Apple when Apple at 216. Apple comes out with bad news when Apple at 180. So why in the world is Apple rallying? There is only one answer. Fibonacci reversal zone is reached. Expect reversal. Rules are met. Take a trade. Apple picking up the steam. And this is Apple next. Rallying as expected. But only if rules are met, you can take a trade. This is Apple today on April 24th. Bullish rally skyrocketed, and what Apple will do next at Fibonacci reversal zone is crucial. This is when knowledge will test you to the core. As I warned you about this Fibonacci reversal zone years in advance, it will be in a play next on Apple. A knowledgeable trader and investor who knows what to do will be in excellent shape. Speculator will not. And that's the power of Fibonacci. And that's the power of the method. And Fibonacci tool I developed in 2008 that identify with ultimate accuracy trend inception, trend reversal in advance. Apple is twin chart with S&P this morning. No surprise where S&P selling off from. No surprise where S&P rallying from. Price action patterns remain identical. Risk management is the only difference. And if I would change this chart to 15, identical strategy remains. Just like Apple. All in advance, never after the fact. So choice is yours. Do you want to trade Apple? Do you want to trade S&P 5-minute, 15-minute? Do you want to trade monthly, yearly charts? As you will see on multiple examples next, choice is yours. Method applies to all instruments, all charts, all time frames, all platforms. Because Fibonacci natural predictive tool that was discovered by Leonardo Pisano in 13th century creates repetitive spirals and triangles that are present in everything, in all financial markets. This mathematical theory that starts with number 0, which is the most important number in the markets that determines trend inception, is almost everything in your trading. And that's a number that's present at reversal zone. And knowing what to do and how to use this number is everything to your profit targets and your trade entries, with 0 and 100 being the most important numbers ever in the markets. And that's how Fibonacci sequence keeps expanding, when 0 and 1 keep adding up into the spiral of each subsequent number being the sum of previous two. Market is flawless Fibonacci puzzle. Absolutely no surprise whatsoever how it identifies trend inception and trend reversal in advance. Nothing in common between Fibonacci and indicators. Fibonacci is mathematical sequence that's natural and predictive. And this proprietary Fibonacci target tool that you see throughout webinar identifies trend reversals for trade exits in advance and independent of news and indicators. Here's a reminder of another top stock on a planet, Amazon. Amazon struggles at the end of the minor trend, proprietary Fibonacci level where S&P bounced from today. Identical Fibonacci support where Apple rallied from when it came out with the worst earnings. Identical resistance as you saw on Apple at 181, where Amazon struggled despite stunning earnings. What do you see in advance? 2000 is a reversal zone. It doesn't matter how excellent the earnings are. The only thing that matters, it's a reversal zone. Brilliant thing to do, take the profits off the table and run. Because this is where price reverses from 80+% of the time. And here comes 2000 number on Amazon. Stunning earnings don't mean a thing. Fibonacci reversal zone mean everything. Amazon selling off. Amazon in free fall. How many points did Amazon collapse? More than $700 per share. What has happened to the investor who kept this position? Fibonacci trader did just fine, exiting in profit, not sweating bullets. This is what price does, independent of earnings, independent of any news. There is no surprise where Amazon rallying from. Its Fibonacci support exact same level as 91 on Apple. And that's been Amazon. And this is Amazon now. Not far off from reversal zone, just like Apple. Knowing what to do with your position next on Amazon is everything. And that's the key. Knowledge is power. Once again, Fibonacci reversal zone identified years in advance will be next in a play on Amazon, will be next in a play on Apple. And knowing what to do with your position is everything. Knowledge is power. Never after the fact, always in advance. No indicator on the planet can do that. And that's the proprietary Fibonacci tools that give you ultimate accuracy, no matter if it's day trading, minutes, hours in advance, no matter if it's position trading, days, weeks, months, and years in advance. Any instrument, any platform, any time frame. Fibonacci does not require any knowledge of math. What it does require, knowledge of strategy, knowledge of rules. There is absolutely nothing in common between Fibonacci and indicators. Fibonacci natural, Fibonacci predictive. Fibonacci is mathematical sequence. Indicators delayed and artificial. Never, ever, ever confuse the two. If I would bring up the chart, Fibonacci is not found under indicators. Fibonacci is found under tools. Fibonacci retracements. Knowing how to use this tool is a key. Schlepping this tool randomly on the chart on the platform will never work. Knowing how to apply is crucial, and that remains the key. But once you learned how to apply and use Fibonacci tool and Fibonacci strategies, you can trade on any platform, any instrument, and it's absolutely free to use. If you found indicators that worked, my goodness, it's a problem, because it can only work on that instrument, only that platform, only specific time frame applies. And it's 1 in a million, because every single indicator is not a magic bullet, but it looks like one. So chase never ends. Market flooded with indicators that look so easy to make money, but none of them do. Fibonacci will override any news events. Fibonacci will override any earnings. Fibonacci will override any fundamentals. And only being politically correct, I say most indicators. 10 years of doing this, I'm still waiting to see more accurate indicator than what Fibonacci tool and Fibonacci strategies you see in this webinar. Here is another reminder. Let's walk down memory lane on oil. Here's oil sell-off chart present in the trading room since 2011. Oil sold off from Fibonacci reversal zone at 126. Oil had been frozen at key Fibonacci support 86 for 7 years. Finally, this support is out and oil collapses to reversal zone. Apple and Amazon were rallying to the upside. Oil was selling off. This is one knowledgeable trader and investor monitoring for trend inception entry. 2015 spectacular fake out. Fibonacci resistance not letting price through. Market continue crushing until next Fibonacci reversal zone, testing you for knowledge to the core. Oil starts finding support and rallying. The only obstacle remains this key Fibonacci resistance. Reversal zone not the place to short, the place to monitor for reversal. And this is oil 2 years later. More than doubled in value. Oil taking a massive pause, but as you could see this channel 55 and 40 where oil was stuck for 2 years. The end of the minor trend, key support 40 where oil rallied from. And what do you see on this chart on oil? Fibonacci reversal zone is next. 77 rallying. So, what do you see on oil far in advance? 77 Fibonacci reversal zone. What does oil does? Start selling off. There is no surprise. All identified months and years in advance. The only thing that left for oil to do is crash through key support 64. Does oil do that? Of course, not without fight. What do I say in advance? 64 is out, 55 will follow. What would your trading be like if you could identify this in advance? Doesn't matter if you trade 5-minute chart. This is long-term investment position on oil, just like Amazon, just like Apple, oil selling off. The only thing that's left to crash through this support, it's a war zone on oil for 10 months. This is the channel on oil. No surprise. After 10 months war zone, oil finally crashes through. And what do you see below? Crucial Fibonacci support on 40. Ultimate place to monitor for long, where oil rallying from. And that's what oil does next. And this is where oil this morning. No surprise. And what oil will do next at Fibonacci reversal zone is crucial. So if I'm taking sabbatical, if taking vacation, My students will do extremely well. They don't need hand holding. They know how to manage position when price comes to reversal zone. All identified in advance, never ever ever after the fact. There is not an indicator on the planet that can do that. This Fibonacci tool can, no matter what you choose to trade. No matter if it's long-term investment chart, no matter if it's your day trading chart, always in advance, never ever ever after the fact. The only difference, day trading charts, minutes in advance, position trading charts, days, weeks, months, and years in advance. And that's the power of Fibonacci tool. What you decide to trade, absolutely up to you. Apple, Amazon, oil, S&P 5-minute, 15-minute charts are twins. Any instrument, any platform, any time frame, identical Fibonacci strategies apply. Indicator-free pure price tell you more about markets and price covered with confusing and lagging indicators. Price action patterns repetitive and easily identifiable, and they remain exactly the same as we addressed at the start of the webinar on 5-minute S&P, on Apple daily, on Euro, on any instrument you trade. Price actions show you psychology influencing the market and give you direct insight into how traders and markets behaving. Shall we take a look on Euro and what to expect? This is Euro 2014. It's a reversal zone, traders, just like 2000 on Amazon, just like 216 on Apple, just like 77 on oil. This was Euro at 140. You would be selling everything on Cayman Islands. You would be selling everything on St. Bart's. Euro in free fall. This free fall just begun 2014. This is what Euro does next. Crashes completely until this support. 105 is lifeline on Euro. Exact same level as 91 on Apple. Exact same level as 40 on oil. Exact same as you will see next, 315 on Netflix. In the next 2 years, I expect Euro to crash through this support. But so far, this support had been respected. This chart had been present in the trading room for years. This is where Euro rallied from. This was not the case with Pound. This is what Euro had done next. Skyrocketing until Fibonacci reversal zone. This time around only 25, not 140. And this is Euro at the bottom, 2018, struggling to break through 118. It's a war zone, it's bullish correction, 118 stopping bullish rally. This is a problem on Euro. Euro continues selling off. 118 is a brick wall. And this is Euro now, in free fall until 109 next. But shorting randomly will never work. You need to know where to enter, where your stop is. Euro oversold. 109 is out, 107 is next. again and again and again, oversold. Shorting randomly will not work. And that's the power of the method. No indicator on the planet will show you that. And in the classes, all the time we're projecting long-term stocks, long-term forex. Sell-off is not over on euro, but my goodness, pound looks million times worse. As we knew extremely clearly, 2014. It's a place to take your profits off the table and run. Saint Barts and Cayman Islands will be so affordable for us poor Americans next. So, that's the power of the method. Choice is yours, what you decide to trade. So this is what I teach every day. This is what I taught this morning, the entire day, to the group of my exclusive graduates. From Colombia, South America, from UK, from Hong Kong, from Qatar, from London, from all over the world, every single trader who trades different account size applies exact same formula. Major trend consists of 5 Fibonacci waves. Ultimate point of entry, a trend inception. Wave 1. Never ever 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 trade against a trend. Wave 2. Worst idea ever. Ignore wave 2. Monitor for continuous of the trend at wave 3. Never ever ever touch wave 4. And never ever ever buy into trend exhaustion, Fibonacci reversal zone. It is that simple. And if you would take a look on this chart on S&P E-mini future, this is the market every day, every time that keeps repeating exact same formula. Here's a wave 1. Enjoy. Rules are met, take a trade. Do not ever 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 trade against a trend. If you do, you're trading against yourself. Ignore this entire noise. Rules are met, take a trade with a trend on wave 3. Do not ever touch wave 4. Counter trend move. Take a break, master your golf swing, ignore. And when all the noise and all the junk is over, enjoy and know extremely well where to exit your trade. And that's what price does every single. And that's exactly the reason S&P sold off. Not the place to buy, the place to exit. Just like Apple, just like Amazon, 15-minute chart doing exact same thing. Nowhere to exit your trade. And where do you see S&P 15-minute chart rallied from? One last push, just like Euro monthly. Agree? Identical place. Identical Fibonacci level. Nothing else matters. Price action patterns and Fibonacci formula remains the same. And if I convert this chart to 5 or 3 on any chart you choose to trade, identical formula will remain. Never buy into reversal zone. This is the reason market crashed last week. Everyone clear on that? And as you will see next, that's exact same thing that played out on S&P 2018. all in advance, never after the fact. This is S&P Traders 2008. Charts are twins with 15-minute chart you saw. Next time market crashes, if you know where Fibonacci reversal zone and if you understand strategy rules, you will not lose money, you will not lose your mind. You will not suffer through what happened on Apple and Amazon last year. I've learned that lesson very, very clearly in '08. Market is flawless Fibonacci puzzle. Fibonacci reversal zone reached, rules are met, exit your trade. And if you like to short the markets or you like to buy the bottom, rules are met, take a trade. It is that simple. Every single rule based on critical rules. And this is S&P in the recent markets. This is long-term investment decisions. Bigger the account size, bigger the position, longer the time frame. Smaller the account size, less risk, longer you can hold your position. If day trading not your cup of tea. This is brutal bearish correction 2014, 15, 16. Price is sitting at key Fibonacci support 1800 number. Market is brutal, market is nasty. We're discussing with students every single day that 1800 number will determine market for years to come. What do you see ahead of you? 2800 reversal zone. Does the price reaches that level? Of course. 2 years later. Everyone seeing this? So, let's take it a step in between and take a look on the events in between, shall we? Because election night was stunning, flawless bullish entries. Take a look. What played out in 2 years in between? 1800 number on monthly, trend inception on weekly. Price skyrockets until 2200 number, the end of the minor trend. Price is taking a pause. Market in pain for 7 months, market collapsing, but knowledgeable trader knows as long as 1950 respected, bullish trend remains major. Market in pain, selling off, pulling back. Election night, flawless bullish points of entry. Price reaches Fibonacci resistance. Would you like to skip through the next 2 years? Because that's where market rallied from in December 2018. I will remind you next. Bullish rally in progress. But there is no surprise, we knew that in 2016, when key support was respected. But in between, this is what plays out on weekly. If you like to hold position for weeks and months. So, this is what price does next. Reaches next level. Key Fibonacci resistance becomes key Fibonacci support. And I can give you hundreds and hundreds of other charts because that's the events of 2018. This is a place to exit. This is not the place to buy. Just like on Amazon, just like on Apple, just like on oil. All spelled out in advance. But this was a beautiful, beautiful place to be. Famous 2300 number. Do you remember that? To the downside? It's a reversal zone. The place you monitor for reversal. That's the place where S&P rallied from. And that's the market. Where's S&P right now? pass 2900. Where will S&P head to next? If it's not gonna crush, as 2900 is key support. This is market this morning. Knowing what to do with your position is a key. Speculating, never an option. And that's S&P since 2014. Just like 5 minutes, just like 15. What is the difference? Risk management and trade hold time. Choice is yours. What do you want to trade? Identical formula applies. Nothing else matters. These proprietary Fibonacci tools that you saw in multiple examples give you ultimate accuracy. In day trading, minutes, hours in advance. In position trading, days, weeks, months, and years in advance. This tool is not software. It is not an indicator. You are the one who is installing this tool on any platform you choose, as long as platform has Fibonacci retracements. This tool can be applied to any instrument, any time frame. Doesn't matter if it's 1 minute, doesn't matter if it's tick chart, doesn't matter if it's pound, if it's oil, if it's anything you choose to trade, choice is yours. This tool is yours forever, as knowledge is yours forever to keep. Here's the most crucial part of success in trading. Every single day before the start of the trading room, we're discussing with students institutional bias. You don't need anything. You look on the chart and you identify institutional bias, and you never, ever, ever, ever trade against institutions. Since 2018, on S&P, very, very clearly, institutional bias at trend inception had been bullish. That's not the place you want to short near. This is bullish rally trend inception. Right now, market in very challenging conditions. Bullish rally overextended. We are at historical high. Market in extreme pain. And that's the key. Buy at trend inception with institutions. 2900 is institutional support. Never ever short near. Institutional bias remains firmly bullish. And that remains constant. And if you understand that, and if you understand what institutions do, no matter what you trade with drastically higher probability. And that's what Fibonacci does. Identifies institutional trend inception in advance as key points of entry. And it doesn't matter if you trade 1 minute chart. Absolutely. Choice is yours. What you decide to trade. And that's what price does. Every day, every time. And that's exact same thing S&P had done this morning when it crashed from Fibonacci reversal zone on 15-minute chart, on 3-minute chart. Just like weekly had done in 2018. No need to wait for weeks, months, and years. That's been the day on S&P. We're not the place to buy, where it's a place to exit. Just like oil weekly, just like Apple monthly, just like Amazon weekly, just like S&P weekly, all the same. Nothing else is needed ever. Pure price and Fibonacci only. The most important part of everything in life is mindset. I can give you the most spectacular strategy, but if the mindset is not of serious trader, everything goes out the window. It never ceases to amaze me when I work with complete beginner traders how quickly they master the method. No matter how spectacular strategy is less than 20% of your success. More simplistic the strategy, higher success rate. Speculation never an option. Mindset of a trader is always completely opposite of investor. Investor can speculate and be negative for weeks and months. If God forbid trader applies investor's mentality, accounts get blown up instantly. Never ever fuse and confuse the two. Trader's mentality, sniper's mentality, completely opposite of investor's mentality. When every single decision and every single moment and every single point makes a difference between success or opposite. Every single strategy you've seen in this webinar, you can do both. You can do investor's mindset, or you can do day trader sniper's mentality. Multiple traders and students do both. But if sniper's mentality is way too challenging, simply apply everything to long-term positions. That's a problem new traders make. Applying investors' mentality to trading, speculating, throwing random market orders in the market. Or even worse, treat trading as gambling without serious business approach. 95% of traders chasing indicators. That's the reason that less than 5% become profitable traders. This is the 5% that takes serious business approach, not chasing indicators. 95% mentality is reactive, focusing on lucky point now, schlepping random market orders in the market. No long-term goals, no risk management. Trading is fun. Let's trade on the news. How did it work for you? Can't lie to yourself. You know the truth. Chasing the magic bullet will not work. Applying mentality that more money, if more trades, more indicators, smaller the time frames, 1, 2, 3 minute charts, more instrument, more screen time, more money. That's broker's favorite client. 100% of brokers making money because 95% of traders apply that reactive mindset. 5% that applies proactive mindset has clear long-term success goals, not focusing on lucky point now, not chasing 1 minute chart, not chasing indicators. This is a trader that masters indicator-free price action. This is a trader that treats trading as serious business and applies sniper's mindset to day trading, with risk management being key. Knowing quite well. More money if quality trades placed. Never ever quantity. If spending less screen time, trading less instruments. And what if you can take one trade per day and spend less than 2 hours in front of the screen and have phenomenal trading career? Is that a bad way to make a living? This is what graduates in the course do now. This was what traders share. If you apply quality mentality and instead of adding number of trades at the lot size, your absolute maximum workday 2 hours. Right now in graduate bootcamp, celebrating 10-year anniversary, every single morning we see very clearly maximum workday 30 minutes so far. Third day of graduate bootcamp. One trade you are out at the lot size. Never ever number of trades. Get rid of trigger happy cowboy mentality. Have long-term vision. Focus on quality. And if you do, rule-based method is a path to your success. Most important part of happy life, most important part of successful life. 5 people around you. Those 5 people defines you and who you are. Trading community is crucial to your trading success. If you have incredible partner and you are surrounded with traders who have quality mindset, chances of you being successful exponentially high. And trader who trades with community of quality traders who understands institutional bias, trades with consistency and with very little stress. Here's a couple of emails I received recently from graduates of the course. Curtis B. is JP Morgan executive. We just met in New York. To hear the JP Morgan executive telling me, after being in 30 years in the market, that I've given him new perspective on the market with ultimate simplicity, with repetition about pivots, and understanding where institutions may step in, is huge. It's not coming from beginner trader. It's coming from Wall Street executive. Here's another reminder. Carrie D, in the course, taken first place in Forex competition. Send me this adorable email. I only traded 7 days out of the contest. What would have happened if he traded the entire contest? This is what students do, traders. Those who apply quality mindset. Here's Bill, retired executive. Bill is 73. He's shocked at simplicity of what I teach. Simple is brilliant and simple. Forget everything I learned of 20-year experience. Follow the rules. Do a full week of demo and trade any instrument. Bill trades S&P and gold. And this is what the students had done. Fibonacci Mastery Group course. In the next months of May, we will be making drastic changes. We will be expanding in much more advanced trading, so there will be different level of courses, traders. This course right now, 8 weeks, where all the classes recorded, does not require your attendance. If you cannot attend, you can view recordings at your convenience. I'm with students on average 4 days a week with key classes Monday and Thursday, trading room included as of now. Students in the course trading options, trading forex, trading stocks, trading ETFs, trading futures, every single student, different experience, different background, different time frame. Here's Brad, and I will show you the email I just received from him. Tomorrow Brad is speaking in the graduate bootcamp. Brad been trying for 20 years before he came to the course. This is one of the emails I received in the month of February. This is what he's done after trying for 20 years. This is Brad's account size for the month of April. And those of you who know how horrific market conditions are, brutal, because bullish rally is doing nothing on S&P, this is Brad's success rate. 85%. Absolute maximum work week, 10 hours per week. And that's the reason I love and breathe what I do. Students who make serious effort become successful traders after trying for 20 plus years. If Brett can do it, so can anyone. Private mentorship is an entirely different program. Private mentorship 6-month course includes all group classes, includes all videos, includes access to trading room, and I meet with you one-on-one on weekly basis, and we concentrate on instrument you trade. If you need help with Ninja Trader, I will gladly set up the tool for you, and we work via screen sharing on the platform of your choice. Choice is yours. What you want to trade. In the month of May, this price will be raised for the group course to drastically higher price. During the month of April, because we are in graduate bootcamp, this is the price for the group course. And that, what's happening right now. So, let me guide you to a couple of places on the website so you know where to find important information. So if you come to the website, under the tab Courses, you can review details and the information about courses at your convenience, about Mastery Group and private mentoring. You can browse thousands of videos on YouTube channel. Very important part of the website, what graduates share, what they trade, and what they speak in the podcasts about what they trade. We have extremely close community of graduates. In the community of graduates, in the course, you are surrounded by like-minded traders who focus on quality, who focus on consistency, who have pure price action mentality. Ultimate quality, ultimate consistency, no matter what you trade. And every single trader trades different instrument. And every single trader shares, no matter if you trade options, no matter if you trade Forex, price action and Fibonacci remains the same. And in a bootcamp, focus on options. Brett, Pablo, Victor, all these traders speak and share what they trade. If you have any questions for me, pretty please, do contact me at info@fibinstitute.com and 925-257-4298. But please do review the information on the website first. Question about Apple. Bullish rally on Apple overextended to 16 is a crucial level on Apple. This is where Apple sold off from at the start of 2018. Knowing what to do with your position on Apple is crucial, absolutely crucial, as this is where price sells off from 80+%. And this is exact same on Amazon next. Identical structure, identical price action remains. Reaction on Amazon at 2000 is crucial. Question about gold. Yeah, so this is chart on gold traders. Gold right now sold off because it came very close to Fibonacci reversal zone. And where gold is now is crucial. It's taking a pause at crucial Fibonacci support, all identified in advance. Gold had done identical thing in 2018, just like Apple, just like Amazon had done. Knowing what to do with your position is crucial. So ladies and gentlemen, I thank you so much for your time. Here's a link that posted in front of you, and here's the email and the phone number. If you would like to speak with me, please do not hesitate to reach out. I'm always here to help. Thank you so much for your time. I look forward to hearing from you. Have a great afternoon.